Hello again, people. Right, I'll try and remember to put the disclaimer in. Do not trade anything that I suggest. Just try and, if you're interested in how I trade, try and learn from it and make your own analysis. So, just a quick one. I have been away from the charts more than I've been in front of them today, and I've still managed to make I think I'm on my 11th positive trade, 10 on gold and 1 on GJ, and all good quality trades, not scalps, all good 15 to 20 pip trades. So volatility in the market, as I've mentioned before, it doesn't mean you have to trade dangerously, because I live and breathe this method, as you well know, and it's, in my opinion, it's safe. And the reason is because you're trading after you've broken some sort of support or resistance, depending on what direction you're going, and then you're entering using the same pattern on the lower time frame. So you're always trading in the direction of a higher time frame, sometimes two higher time frames. So, as you know, I'm studying gold. I'm really getting into this gold. It does. My trading has gone stratospheric since I got involved in Digger and Aussies, or studying what Digger and Aussie do, should I say? And that's why I keep mentioning it, because it really is. It's mind-blowingly inspirational, really. Now, before I say anything, I'll drag the trade onto the chart, just the most recent one. So I literally got home about 2 o'clock from running around bulk buying horse feed because of this stupid virus that's causing everyone to shop panic buy, and it was difficult to get hold of stuff, so hopefully I've got enough for a couple of months now. But so I did my 2 a.m. or 2:30 a.m. 15-minute 2-trade session in the middle of the night, and it's just so nice to be able to put a trade on. It's over in minutes, and that is almost certainly the case with most of these. That's why I decided scalping was the best policy. Suits my personality. So we have divergence in here, which is brilliant, suggesting a turnaround. And I noticed there's divergence on another currency pair, a couple I think. I was looking at GJ, yeah, divergence on the histo there, and look at that turnaround you got there. So I haven't done any back testing or statistical analysis. I thought I was going to at the weekend, but I don't know why I didn't get it done. Divergence here, and these moves are massive. Remember, I'm used to grabbing 5 pips. If you'd entered somewhere there using the lower time frame, that would have been a break. This candle, big candle I'm talking about, then it would have yielded 24 pips before that little bit of drawdown, 12 pips there, and then ultimately it's a 35 pip move. So divergence, you need to check it yourself, but lower lows and higher lows, and clearly higher lows there, and I think and then we've got the later one here. And again, massive move there. This is GJ, of course. Once again, a break of a resistance, a close above it signified the reversal. Notice here, it tested the resistance, didn't close above it, wouldn't have been interested in that possible trade there. So it's that simple thing that is just one tick box that you must apply, and then it goes straight back to that hourly 8 MA after doing a 110 pip move. The volatility shouldn't scare you if you've got a solid method, and that's a 2B reversal pattern there again, remember. So the break through the low of this here, which happens to be that red line, but I don't trade them, was that candle there. So you could have said okay, and that coincides with my high low, lower high, lower low, low high. Oh sorry, no it doesn't. Yes it does. High low, lower high, lower low, low high, higher low. You discount inside bars because it hasn't broken the low or the high of the bar prior to it. So you sing the song on the next bar along, low, high, high, low, high, high, break and close above previous resistance, and up she goes. 100 odd pips. So that was just hearsay. That was, trades missed. Coulda, woulda, shoulda. It doesn't really matter. So back to this gold trade. You got divergence in there. We can draw that in. Oh, so yeah, I got back about 2 o'clock. So 11 or 12 trades with minimal screen time. Left about 11. And oh, sorry, something's slowing my machine down again. Getting distracted. So what I'm going to do is draw the lines on this chart for you as I saw it. So we've got the massive, the lowest low there, that candle I'm talking about. So any break of that would signify a potential reversal. Break and close above. Notice you got no break and close above any candle that makes a new low. And that one is there, but I like to see 2 candles, remember, high, low, lower, high, lower, low. So we would needed to have broken above that one to be the best possible signal. There's no need to take bad ones, just wait for the best possible. So, and this one did in fact create a high, low, lower, high, lower, low. Then it poked up above this, so it engulfed that candle there, but we could still treat this as the trigger, if you like, to consider going long. Really annoying me, this computer at the moment. I need to get a new one. Well, it's not designed for making videos, basically. Never intended to do that. That is the lowest low. This low didn't break it. Just double check that. It doesn't really matter in this instance. Oh, it's not doing it. It's messing me about. I'm getting fed up with this. The low, 51.24, and just to be sure, the low of that one, 51.70. No, I seem to remember that. So that's the lowest low. As such, we've got to break above either this candle or this one, and that's the candle that did it. As you can see, once you've done that, you've got a pullback, continuation. So had I been around at this point, I could have considered trading there. I'll drag the trade onto the chart, remind myself what I did. There's the trade on that green candle there. So in fact, I remember now, I waited for the break of the high of that candle to enter. So we go down on the higher time frame, should I say. I did mark those off as well. That low there, as you can see, the M15 high corresponds with the M30 high, and that will just overwrite that level there. If it drags onto the chart, apologies, it didn't again. Something is really clogging up. Yeah, so it looks like 35 now because it's got the 3 and the 5. And then we can do the one across from that, the red one. And in this instance, I was trading to that M30 high because remember my mantra, it's if it wants to go high, and there is every reason, because of this divergence and so on and so forth, and all the other analysis, the hourly 8MA being up there was so many boxes ticked as to why this was a good reversal point, that I took my trade to that high. So you will see when I highlight that, and we go on to the 5 minute now. Oh yeah, we can. I would have marked the H1 as well, and the H1 is way up there. There above the price, as you can see, and there was no point marking the H4. This support is likely to be tested, because what I always say about the most recent support So again, that could potentially be another target to the long side for this, because support, once broken, needs to be tested for resistance. So these are all the things you should be, or hopefully, if you like this method, should be placing on your checklist. You could also do your descending trend line. My dog is annoying me. You might be able to hear her whining in the background. She thinks it's her tea time. So that's a target for, that's a magnet for price as well. So let's get on to the 5 minutes. We'll look at the entry. Where's that M30 high gone? H1 high. Where's my target? It was there just now. That's weird, it's moved off the chart. Oh, come on! Oh, it might be my mouse battery's running low. Actually, after slagging off my computer. Yeah, that's it. There's an outside bar. That was an inside bar. That's it. So now down to 5 minutes. Apologies, but still, it's giving you time to study the chart. M30 high. That was above my price. That's it. I cut it short of that because there was no need to be greedy. Because these moves are crazy now. I expected it to go there. I remember now, I'd done the distance from my entry to there, and if I remember correctly, it was 41 pips or something like that, which is just ludicrous. 48 pips to that. I just didn't want to take that chance. There's no point. My trade was about 17 pips net of spread. More than enough for a fairly rushed analysis from my point of view, because as I say, I got in about 2 and the trade was entered at with 3 hours difference now, so 2:20 something. So that is a rushed analysis for me. And as you can see, price has broken that. So hopefully you've got an idea of how I analyse a trade now. Divergence, time of day is after the American Open. A nice trend in place, low, high, high, low, high, high. And this is just going to the moon now. This is the other point I want to make as well. Don't get anxious about trades. They're everywhere. There's numerous entries here, valid entries as well. Target that level there. There's now you can see that support level has been tested that I drew on the chart on the 15th. This is just ludicrous, this move. It has moved since my trade closed. Gold has moved 370 pips, and look, there's that descending trend line. It's going on to test. You know, this is it's you're probably getting bored with my videos now because it's just repetitive. Hourly 8MA attracts the price. All these different resistance levels have to be broken when the price decides it's reversing. They can be used as targets, they can be used as stepping stones, and then you use your indicators, because on the 1 minute chart you can trade between all these levels safely. You know, there's an entry there because it's turned from green to red, and you know where's it going to go after it's broken that resistance. Highly likely to go and test that support, and there it is. And you don't need all these other things on the charts really. You could have cleaner charts. Perhaps I should clean them up, I don't know. But sorry for the long video, guys, but it's step by step, and apologies for the mouse and the way my computer's running at the moment. I'll have to get to the bottom of that. And thank you for watching, and I hope this helps. Any questions regarding this stuff, by all means ask. You know, don't ask anything about my account size and money and stuff like that. and trade sizes. But if you want to ask anything about trading, please do, guys. Look, and there's a new, another ascending trend line now we can draw, which I would have drawn prior to entering my trade, but I cleaned the chart up so that I could do it from scratch for you. So yeah, I mean, we've talked about this time and time again. Red to green, red's the pullback, green bar is, and they don't repaint, so every one of those green bars would have represented a possible entry there, and that's probably about 50 pips. And this is the thing that I don't mention enough, is that the drawdown on these entries are, once you get practice and get them right, the drawdown is not too bad, because you're entering after the pullback. You're entering after the big boys have done all their, there, another 50 odd pip trade, no doubt. Top of the candle, 100 pips, sorry, quick 100 pips on a 5-minute chart, and it goes on. That one, let's have a look at that one as well. Just practice, guys. You've got the tools now. $71 pips, and you can see why I like gold now. Look, it makes my 17 pip look stupid, but believe me, that's not stupid. There's a lot you can do with that 17 pips. So, thank you for watching. And this indicator, all that is, the arrows. Whenever you see an arrow, it means and it can alert you as well. It's just the 1 MA crossing the hourly 8 MA. So this is the 1 crossing. You just get an EMA cross indicator. It's crossing the 96. When it does that and closes above it, that's telling you potential longs. And what came first, the indicator or the trade? But this RSI is fantastic. Thank you for watching. Have a good day.